So starting here on Euro for the week, just seeing what it was, the outlook was, and how prices played out. So I'm starting again up on the monthly time frame, big picture view. We had this fair value gap in here that I was looking for price to come down into. It's looking more unlikely that that'll be the case just now, but I will be staying vigilant for the rest of the month and seeing how this candle here closes. So we didn't actually come down this way. The economic data that came out this week was very bullish for the markets. So we'll get into that, but this now looks like it's probably going to be a bottom and we're not going to trade here for the time being. This is the monthly candle, so this hasn't closed yet. And with the strategy that I trade, so this here I've marked as the monthly fair value gap. So for me to remain bearish and this to still be a target, I would need to see this come back in the rest of the month and close inside this fair value gap. Once we've closed above this fair value gap, then I'm looking at bullish, and really you're probably looking at these highs as the next target. I will work down through the time frames and see if there's anything in there that I can target, whether it's liquidity or a fair value gap. And this is where we are just now. So it was an extremely bullish week this week. If I come down, we'll go down to the weekly first. There's not any fair value gaps until you get up into here. So there is a fair value gap here. You'll see here I've got marked from the low to the high my premium and discount. So we have actually just tapped up into a premium. So that's another reason. Okay, so if this is tapped into here, the monthly candle retracts back inside this monthly fair value gap, then I might be looking at that going, oh, well, wait a minute, there's a chance that we are going to roll over here and come down for this fair value gap, taking out this low. But ultimately, if we're going to remain up in this area, bear in mind, we are only on the 16th of the month. There's still another couple of weeks of trading left. So if we're going to stay above this fair value gap, then what I would be looking for is for price to come down, and I would look for this fair value gap, the monthly fair value gap, to then support price. To see something in here in the lower time frames, hourly chart or something, where I see a change in market structure, and then that push, and really we're probably going to be targeting maybe these relative equal highs, but then ultimately up into potentially this fair value gap. And then you've also got the high up here. So we will be watching how this closes the monthly time frame. So that's on a weekly basis. If I come down into the daily, there might be other fair value gaps over here that we've not seen on the daily, on the weekly. So there is just one, just right in here, a very small one. That could be a target as well. And there's not anything else there. That's all pretty well balanced, up and down, back and forth, filling in those gaps. And then you've obviously got another one up here, daily. I'm just actually going to label these. So this is the sort of thing, like this is the top-down analysis. This is what allows me to really form a bias, really enter trades with a target in mind, and ultimately try and trade in the direction that the market's headed. So you can get caught up. Come up. You can get caught up trading both ways, and if you just try and stick to the way the market's trading, then you'll do far better. When you don't really have a bias, when you don't really have an idea of what's going on, that's when you run into trouble. So we're going to come back here and just look at the charts. So I'm going to come down to an hourly chart, and you can see here this just went parabolic. That was on Tuesday, and that was the US dollar inflation. So it was 3 points. This is year on year. So it was 3.7. It was forecasted to come in at 3.3, and it actually came in at 3.2. So the market's seen that as a positive thing, and well, a very positive thing, and they really pushed on for the rest of the week. And now we've been sort of consolidating in this area. We have got all this empty space here. So like I say, on a monthly basis, there's the top of the monthly fair value gap. We've also got, if I come into a 4 hour, so it was a daily as well. So if I'm looking for price to come back down into this area, then I'm looking for this to support it. But then also in here, you've got this, which you would class as a bullish order block. So you would be looking for that to support price as well, a bullish order block. Just to offer some form of support. And if you look at that, it's actually about just below 50% of the fair value gap. So that's another key area. So if price was to come down into here after we get a monthly close above the fair value gap, and then it starts to come down here, I would be looking at this area to see how it's reacting. And then on the lower time frames, now although this is a weekly time frame, I mean this could literally be a 1 hour time frame, and then the ultimate target will be the high that's been left up here. That would be kind of the thought process. If I just come in here, it's a weekly. So we'll come back down into the daily, and in actual fact, we'll just go down to the 4 hour first. The 4 hour, like I say, we had this move up. 60 minutes. So where were we? We were Monday. So Monday in here, this was actually a trade that I took. What did I see? So, no, sorry, it wasn't. I'm mixed up. Sorry, Monday we opened up, we consolidated. We'd had this move from the following week. We had this arching over behind this area. I took a trade here, and we had this arching over, and I took a trade here up into this area. So this week we didn't. We were waiting to see what happened, but I did try and position myself for a short for before the economic news. So I seen this move, and I anticipated that we were going to come up and take this high, and then possibly roll over and come down lower. So in here, I actually Yep. So I took a trade out of this fair value gap in here. This was at London Open. And here, I covered the low. I felt like my bias was that we were going to come up, push up, take out this high, and then with the news, it was going to drive us down. So when I seen this, I'm thinking, yep, that's what's going to happen here. But unfortunately, it didn't. It just did not. So the news came in here 1:30. You'll see it pushed down. This is just taken out any longs, people that have got stop losses under here. It's also reacting off this order block, and there's a fair value cap in there as well. And then it pushes higher. So we had this crazy move up. In the grand scheme of things, a crazy move. It was quite pronounced. And this is the market like the market are saying. So the Fed have stopped raising interest rates. They've held interest rates. The Bank of England have also held, no, the European Bank and the Bank of England also held rates. Now, everyone's starting to see inflation come down. The US, like I say, was 3.7, expected to be 3.3, coming at 3.2. And then on Wednesday this week, we also had Great British Pound. So the Bank of England and the CPI for us, that came in lower than anticipated as well. So we were sitting at 6.7% inflation. It was anticipated it was going to come in at 4.7, and we came in at 4.6. So all these are positive for the economy, for interest rates, for risk assets, for currencies. For all of these, it's positive. So the market's rallied, and now it's just a matter of waiting and seeing where we close the month. If we're going to come in lower, we've actually got next week on the economic calendar, we have sort of European PMI and stuff like that, manufacturing. So it's probably going to be quite a volatile time as well next week. Whether that pushes us higher or not, I don't really know. But when it's like this, we just need to kind of wait and see. It's a bit of a tough one. We know we've got levels like this that we could be looking at saying, well, that's going to be a target if we move there. Really, what I'm looking for is a sustained move to come lower. We'd like to see this order block, maybe support price, the fair value gap, support price, and then I would really have a direction for where I see it going. Because as soon as we come back down into this area and get support, then to me, this is a sustained rally. We're going to come back down, support, and then this will be the targets for any trades, or it'll be a direction for trades. I'll take small trades, knowing that that's where my terminus is for price. So I can be confident in taking some longs out here, 5-minute trades on the 5-minute time frame. And just an example is here. So when I'm looking at price, this is a consolidation of sorts. But I'm actually in a trade just now. I've done another video on that. But the sort of thing that you look for is here. So there was a high from Tuesday. Today, we've ran that high. We've taken liquidity. There'll be people that have went short for the week. And it's like, right, that's us reached a peak. I'm going short. My stop loss is just going to be up here. And I'm going to ride this back down. Well, there you go. Price today got manipulation. There's the push higher, takes out their stops, and then there's displacement lower. And this is what's framed my trade. So we've taken this, I said on another video, a short-term low here, broke, short-term low here, broke, prices coming to here. I've taken a short from in this area here, covering up here, and I'm looking for, we've taken buy-side liquidity up here. This is taking buy-side liquidity, and now I'm looking for sell-side liquidity down in here, this low, this soft low around here. I'm looking for that to be taken. That's my target, just in there. So within these smaller time frames, there is still trades if you've got a basis for it, if you've got an idea. You just need to execute it. Now, I'm not saying for sure that I'm expecting to have this trade and hold it all the way down to here. I've learned the hard way that doesn't happen. The markets don't work like that. you're best just to take what the market gives you and then move on to the next trade. I've tried to hold a lot of trades in the past and it's burnt us. So low liquidity, just nice, simple. Don't try and be greedy. Taking little bits from the market is the way to do it. So for this week, I would like to see that being the high of the week. Tomorrow's Friday. Maybe come back up into here, roll back over and take this, finish the week in here someplace. I'll just see if anything appears in the market, then I'm prepared to take a trade. I'm happy enough with the trade that I'm in just now. And then from there, ultimately, I'm looking to see what happens with this monthly fair value gap. And this goes, the concepts that I'm talking through are ICT's concepts. So this works on any time frame. So as that's the monthly, the same thing applies for the 1 hour. So just like that, I've got this fair value gap on an hourly time frame. Prices came up into there, respected it, moved lower. It's come down into here. 15-minute time frame. I've actually mapped up this fair value gap to see how this gets respected. This has got 9 minutes left before this candle closes. So you'll see it's respected up to now. It's coming a bit higher. That might come a bit higher and then come down. But really what you're looking for is fair value gaps to start to hold price, to keep it down. So if I'm looking for bearish, I've had this fair value gap, keep price down. Price has moved away from this area. Now I'm looking for this to do the same on the 15-minute time frame there. There's no 60-minute fair value gap in there. So that just looks quite balanced. But ultimately, we've taken buy side up here, and now I'm looking for price to come down and take sell side because we do have big gaps down in here. And that's, to me, low-hanging fruit. It ran liquidity. It did, to find us a lot. So in here, that low just gets ran, runs liquidity, and then it pushes to the other side. So this feels to me like a more meaningful run of liquidity, a bit higher, a bit more this displacement that's came in here. You didn't really have this here. This was just a grind up a wee bit. So in here, this is a bit more meaningful. This is footprints of institutions, or the algorithm is in a hurry to get away from this area. So that's what framed the trade for me. I'll go back up to 4 hour. There's economic data out tomorrow. It's retail sales for Great British Pound, which I've not really looked at. We're not going to bother looking at Great British Pound. So in here, you see actually there's divergence between the two. So this didn't run these highs, but on euro, we did. It ran these highs. There's a bit of divergence there between the US dollar and EU. So let's just come down in a 60-minute chart. So a similar sort of thing here. You'll see we've come down. It's created this short-term high in here. We've ran down here, although we didn't take liquidity. We have ran down here and we've aggressively moved higher. We've broke this short-term low. We've left a fair value gap here. Price has tapped into the fair value gap and now it's moved higher. And then again, like this, we've broke this high. So that to me is bullish for DXY, bearish for EU. So that gives me some confidence. And you've got buy side just up in here. You've got these relative equal highs in here. There's another equal high. So there's reason for price to come higher. The time of day is not great, it's late on, but I'm happy to just sit on that trade, and we'll see how it goes. My stops up here, so I'd be happy for price to come up, fill in a bit more of this fair value gap, and then roll over eventually tomorrow. But that's kind of it for this week. It was a pivotal week because of the economic data. Everything from a macro standpoint is starting to look up. So once I started learning to trade, you start to realize that everything's run on liquidity. So it then got me into macroeconomics, which is interest rates and consumers and all that good stuff. So the economic data that's coming out just now, the CPI that's coming in lower, these are all positive signs for the economy. Everyone's talking about recessions and doom and gloom, but in actual fact, it feels like we're maybe turning a corner. That's not to say that inflation can't get sticky. Everybody's talking about sticky inflation. It could happen, but it's not right now. Interest rates coming down. So generally the way a recession works, the way the business cycle works is we start tightening monetary policy. So they stop lending. There's not as much liquidity in the market because inflation's getting higher. They raise interest rates. That stops people spending, supply and demand. The demand goes down, inflation goes down. So that's the mechanism. That's how it works. With interest rates coming down lower, that's positive. The Fed and all the central banks have been paused. They've been waiting to see. So the rate hikes that they've put into the system, they're delayed. So we raised interest rates ridiculously fast. Now that's starting to filter into the economy. Now things are starting to slow down. Now it's starting to be seen in the data. So as long as inflation continues to come down, you'll start to find that the interest rates will start to get cut. Not this year, March, April, May, June, probably a couple of percent by the end of the year next year. So I think we're up at 5. So by the end of the year next year, we could be looking at potentially 2. Coming down by 2. So potentially 3%. But it will all be dependent on the data that comes out. But so far, it's looking pretty promising. And that's what drives everything. It drives liquidity in the markets, especially the stock market, the S&P 500. And these concepts that I use on Euro USD, these are all applicable to stocks and commodities and everything like that. All these well-established commodities and price instruments, they're all kind of run the same. The principles all work across them all. So that wraps it up. We'll see how price finishes tomorrow, and I'll do an outlook for next week, see the sort of things that I'm looking at. The key as well is, like this week, it's important every week, but this week when you've got economic data, you need to be, and I've learned the hard way on this as well, you need to be happy enough to sit on the sidelines. Everybody's keen to be in a trade, but in actual fact, being sat on the sidelines is sometimes more important than being in a trade. In fact, it's probably more important most of the time, to be fair. And knowing when to push the limits and when not to push the limits. So when there's high impact news coming out, you're best to be erring on the side of caution rather than maybe trying to push the limits a wee bit. So that about sums it up. It was a good week in the market. It's a good sign for the times ahead. And yeah, we'll just have to see how things go.